You could find the best founder in the world, but you have to make sure at the very outset that you are aligned in the strategy. And it needs to be the founder's strategy and the founder's team strategy, not the investor strategy.
Welcome back. Florian, how are you doing?
I'm doing pretty well. Was a little bit sick the past days, but I'm feeling better now.
But you're getting there. It's the winter.
Yeah.
But Florian, now as you're back on track, difficult question. After interviewing now over 40 entrepreneurs and hearing their stories from doubt to thrive, you must have developed a strong sense of what works and what doesn't. And if you were to set up an investment fund like our guest today, what would be the key criteria for investing in our industry? What truly matters, Florian?
Oh, that's probably the question of all questions, the mother of the investment question.
Yeah, so what is it?
No, I mean, we know all the stuff. No? The concept has to be good and the return on invest should be fine and the founders and leadership should be good. But I think what I take out of the last discussions we had, I would say that cash flow might be important so that you cannot run out of cash. So I would put a lot of focus on how the cash flow is organized actually and in the future of such an investment.
Let's see what our guest says later, because today we have our third investor on our show. We started very strong with Henry McGavin from McQueen. We followed by Robin Rowland from Trispan. Both links are in the show notes. And today we have with us Darrel Connell, managing partner at IMBIBA. And if you don't know IMBIBA, quick background, it's an investment firm specializing in the UK's vibrant leisure, entertainment and hospitality sectors. Over 25 years of experience and a team of 14 professionals, 140 million under management, majority in F&B, and in our industry, Pizza Pilgrims. You can go back to the show we had the founder here and Farmer J, where Darrel also sits on the board. IMBIBA is B Corp certified and is Investor of the Year according to the Retailers Award in 2023. IMBIBA carved a niche in backing innovative consumer-facing businesses with a combined investment and operational approach. And very crazy, recently they announced to open a 6,000 square meter hospitality and leisure venue in Canary Wharf with their hotel, restaurant and leisure brands. Under Darrel's leadership, IMBIBA has not only raised substantial funds, but also established itself as a trusted partner for entrepreneurs. And this is why we have him on the show, and this is what we want to talk about. Welcome, Darrel.
Hi, very nice to be here. Thank you very much.
What an intro. So there will be more difficult question, but the easy one at the beginning. Darrel, what makes a good investment?
Well, I like the cash flow thing. That was good.
That was good. Florian,
good
for me. Darrel, do you have some space on the team? Do we hire Florian?
Cash flow. I wish more of my colleagues were as interested in cash flow as you guys. This is good.
This is good. What else is it, Darrel?
Look, I think all roads, I mean, it's a bit of a cliched answer, but all roads ultimately lead to the quality of the team and the founders. That's really what all roads lead to. I mean, the concept's got to be good and the food has got to be good and the product's got to be good. But if the founder and founders and the management team aren't great, all of the other stuff goes out the window. And
you invest in the people rather than the concept, Darrel?
Well, look, obviously both. Everyone loves there needs to be one answer. Unfortunately, there isn't really. The concept, if you look at the businesses that you've mentioned, the Pizza Pilgrims, the Farmer J's, there are many, many components that make those great businesses. And it's not, you can't just say, with Farmer J, you can't just say it's the food or it's Jonathan. There are many, many components. Like, for example, in the game we're in, property strategy, massively important, massively important, particularly for the young businesses that we're involved in. If you're opening your fifth site and you get it completely wrong, the implications of that are not just, we have one bad site. it's cash flow, it's management time, it's energy. It becomes a sort of negative swap, if you like, versus if you got that fifth site right and the business just continues on its trajectory. So,
and how do you help them? Because I mean, you're absolutely right. You picked the topic, which also I remember Robin had very clear with the property strategy. Because one thing young founders or first-time founders in the industry maybe don't know so well is the property strategy. How do you support them? What can you add?
So we are, as to my understanding, the only firm in what we do that has a full-time property director that works at IMBIBA. So Kieran Sherlock, who's a long-time colleague of Robin's. So he was the property director of Yo Sushi, taking them from 7 to 70 sites. So Kieran works across all of the brands that we're invested in, but more often, you know, if Kieran is not the property director of the business, he will put in a property director that he has worked closely with over the years. So we always insist that the young brands that we're involved in bring in a property director as part of the senior leadership team, and that might just be for a day or a day and a half a week, because they don't need 5 days a week. But that expertise in property is so important for young brands as they scale. And often we'll find the founders, in what we do, we often find the founders have specific skills. So some of the founders we back are really good at property and good at marketing, but not very good at finance or operations, or vice versa. So it just depends on what the job of IMBIBA really is, helping the founder with the gaps they have around them. So one of the businesses we're involved in is a business called Little Houses Group, which is a private members club for families and children.
I saw that. Very cute.
Yeah, it does very, very well. And Charlie Gardner, the founder of that business, is exceptional at property. So he doesn't need any help on property, but you know, he needs help in other areas because none of us are perfect.
Darrel, before we come to the more tricky questions, I want to pick one more because we had Thom here on the show with Pizza Pilgrim, and I would like to understand a little bit, because there's like hundreds or thousands of pizza concepts out there, and you chose to invest in one particular. What is it really then when you look at the crowded industry, and there's even 10 more in UK, which is similar good, which you could have picked? What is the tipping point then when you look in such a crowded area? Because Pharmacy is a little bit different. They're very standing out. They're kind of trading to create their own thing, and I'm a huge fan, but that's why I picked the Pizza Pilgrim. What is the tipping point? Because I'm sure there were others knocking the door, and you looked at other pizza concepts. You don't need to name them, obviously. But what is the tipping point then when you say, okay, that's it? What is it in that specific case? What made the needle moving?
So I think just to sort of row back from your question. So with pizza, you're absolutely correct, everything you've said. And the way we work here at IMBIBA is we look at subsectors. So we looked at the pizza market, we researched the pizza market, and we decided, this is some years before we invested in Pizza Pilgrim, that if we wanted, and we spent some time with Thom and James 2-3 years before we made the investment, and we decided here within IMBIBA that if we were going to make an investment in the pizza market, the only business we would back is Pizza Pilgrims. We made that decision. And that's a common decision that we make here across other subsectors. And often we're unable, if we choose a business in a certain subsector, sometimes we're unable to unlock that investment. But maybe the business doesn't need money, or we can't agree terms that work for both parties.
Timing is wrong or whatever.
All of the various things. But Pizza Pilgrims, so that was the decision we had made on Pizza Pilgrims 2 years before. Then COVID happened, and we had spent some time with Thom and James over 2 years, 3 years, and then it felt a natural fit. But to answer your specific question, in Pizza Pilgrims, the business and the brand has huge authenticity, huge authenticity. The pilgrimage that the boys did 10 years ago, they did the 10th anniversary last year. You know, it's two brothers about, you know, scourging through Italy to find the best product and bringing it to London. And the whole business hinges on that authenticity. And the team here hinges on that authenticity. So we would not have done any other pizza brand other than Pizza Pilgrims.
I like that answer a lot, because it also shows and encourages young founders that sometimes just carrying on what they truly matter and do it authentically is enough, so to say, to get the attention. So now we come to the set of questions which we prepared for you, which are a little bit more trickier, where we need more brain power, because we are sometimes lost. Because we have interviewed over 40 entrepreneurs, Darrel, about their journey from doubt to drive. And we summarized our learnings in a white paper. So here I have a printout, but you can also download it from our website, and we put the link in the show notes. And we want to dive deeper on some of the insights. So we digested and distilled kind of 9 insights, and some of them we pick, and we want to see how that insights of a great entrepreneur, so to say, aligns with your investment philosophy. So is the things which we distill together with the help of our friends the same what you have? So the first set of questions is about your hands-on guidance, because you said, and you were very proud and said, IMBIBA provides the hands-on guidance to portfolio companies. And you said we're the only one so far who is doing that. So the question is, how do you balancing offering that operational support, but still allowing the founders to make bold decisions and to make failures? So that's a very tricky one, I guess, philosophically, because on the one hand, obviously, as an investor, you strive for perfection and return of investment, and you don't want them to make founders, but you also invest in early stage businesses who maybe should make founders failures to learn their own thing. So how you balance that operational support and still allow the founders their autonomy to make bold decisions / their own mistakes?
Yeah, look, it's a great question. And I think just to provide a bit of context around the answer is that we manage investment funds here. So in any fund, so our most recent fund is a £90 million fund, and we will make out of that fund probably 12 investments. Okay. Now, those 12 investments, and I'm telling you as the answer of looking at it from an investor's lens, there will be some businesses which are what we would call very early stage investments. So maybe 1, 2, 3 sites. And there'll be other businesses which might have 10, 15 sites in that. So in a broad range. Typically, the ones that are at 10, 15 investments will require less. They will have gone through the journey, much of the journey. So they will require less hands-on support from IMBIBA, because they will probably have a CFO. They'll have they might even have their own property director. They might have an established board. So that is a bit lighter touch. And then the younger businesses, by their very nature, might just be the founder might not have the support of a management team or a great management team around him or her. So therefore, we get more involved with the founder's blessing, because they would never take investment from us if that's not what they wanted, if that makes sense. So it's a real balance. We look at balance across our portfolio. We couldn't possibly have 12 investments in a fund where they all needed a huge amount of support. That just wouldn't work for anybody. It wouldn't work for us, and it wouldn't work for the founders, because we would be selling them short. But the key thing is we never, ever meddle in the day-to-day operations of these businesses, ever. We never, ever look to comment on or change or meddle in any way in product. So if Farmer J is a very good example. We invested in Farmer J when it had 1 or 2 sites, very young business. The product was amazing. Jonathan, the founding team with Ali were amazing, but they really needed support around finance, financial control, operations, and property. Those were the areas. If you ever have an investment firm like IMBIBA commenting on the product quality, imagine me going into Pizza Pilgrims and saying, guys, I had your absolutely delicious Induja, but I just don't think the crust was good enough. It's wrong. It's fundamentally wrong. So it's about the business infrastructure around the founders and support, as opposed to anything to do with the brand or the product. They should be sacred.
But you also see, I fully agree on that, and it's really great that you say that. What I think it's more difficult is you sit also as a non-exec there, and if you're like a father, and for example, if you go to the private life and you see your kids making mistakes, we always say in the modern education you should allow them to make mistakes because they need to grow up and learn. So how difficult is it to sit on a board as a non-exec in a business which even carries your money and see that they're running into that mistakes? Do you interfere? And we're not talking now about the Induja and the product. We're like talking about maybe a strategic mistake. How difficult is it to be hands off and say, okay, guys, figure it out, make the mistake. We're going to help you afterwards to clean up. Or do you interfere?
So there are mistakes and there are mistakes. So I'll give you an example. Property, if we are opening a new restaurant or new bar or new venue and it costs 800-900 million pounds of capital expenditure, and we fundamentally believe that the location is wrong and we have data to prove that. So I'll give you a good example, Clerkenwell or Spitalfields. We have lost millions of pounds over the years in those areas. So if Farmer J or Pizza or any of the businesses we're involved in said we want to go and open this site, in Clerkenwell, we would, I'm afraid, have to say, look, guys, I'm really, really sorry. The whole of London is in play, but it's a graveyard, and we know it's a graveyard because we've lost money there. These other 7 brands have lost it, so it has to be evidence-based.
Mm-hmm.
So that is a red line for us because we have that expertise, we have that domain knowledge, we have hundreds of sites across our portfolio, across the brands. But then there are more day-to-day business decisions, which the founders, the investors and the non-execs, due to your question, should not be meddling in. There are very clear things delineation between executive powers on a day-to-day basis and strategic board issues. Hiring of a team, there's many examples where, we'll be on a board and the founder will say, oh, we want to hire this person or that person, and we want to, and I might have a view that actually that just sounds like a bit of a car crash. I can't see that working out, but that's up to the founder to make that decision, and it may work out or it might not. And it's really important on a board structure as a non-exec that you do let founders, make mistakes and, learn themselves. And particularly you don't say, I told you so. It's really important.
You're the kind of investor I would like to have. So the next time I'm looking for money, my friend, I'm going to call you. One quote before I hand to Florian. In our white paper, we had one entrepreneur. He says, you always have to ask yourself the question, will it kill you or will it just hurt you? If it will just hurt you, stand up and go. If it will kill you, you have to rethink. And I think that's a little bit what you said. If it's just a scratch at the face of the entrepreneur, let him go. But if it really puts everything in danger and you have the evidence, you need to step in. So Florian, go ahead.
Basically, Darrel, you mentioned it already, how important the founders are, the founders team, the leadership team is. But can you explain a little bit more in detail how you pick them? Because it all starts with the vision of the founder and the idea. But how do you secure that, or how is your assessment in their why in alignment with your vision as an investor?
Well, I think there's 2 different questions there. How do you pick the founder? And we'll come back to that in a second. But the second thing is, are you aligned? So you could find the best founder in the world, but you have to make sure at the very outset that you are aligned in the strategy. And it needs to be the founder's strategy and the founder's team strategy, not the investor strategy. So we come across many, many great businesses on our travels across the UK who will meet the founders and they'll have a brilliant business. And they're not right to take money from us because they may be a family business, or it's a specific journey you go on when you take money from a company like IMBIBA's or any other investor, that there has to be some sort of liquidity event. So, in 3, 4, 5, 6, 7 years in the future. And that's not right for every business. So it's really important you have that discussion early on. And we always do. And similarly, it has to be a certain growth trajectory. Now we're, the restaurant industry is littered with car crashes of people going too fast in their rollouts, and we are very cautious around that. So all of our returns assumptions work around the ability of doing maybe 2 or 3 venues a year maximum, sometimes even 1 venue a year. Whereas there might be some founders who their vision is to do 1 site over 5 years, and in which case you say, I wish you all the best, whatever I can do to help you, pick up the phone. But we are misaligned, and it is what it is, and that's fine. So it's really important that you have those discussions pre-investment and actually very early on in the discussions. In terms of picking founders, unfortunately, that's very much an art, not a science. And it's, again, let's talk about Pizza Pilgrims or Farmer J. In Pizza Pilgrims, you've got Tom and James, who are, they are just exceptional at what they do. If you spend an hour in a room with them, you walk out going, wow, this brand has such authenticity and is such of high quality, et cetera, et cetera. And they're a yin and a yang to each other, and they're brilliant. And similarly with Jonathan at Farmer J, He is extremely impressive, and he is maniacally focused on food, and he really understands food, and the product is core to that business. So I'm being a bit verbose in answer to your question. But with founders, it really is, from an investor's perspective, a bit of a gut feel. Now, they clearly need to be of a certain, intellectual, operational ability, but that's a sort of given if people have opened, a bunch of restaurants or sites. So it is a bit gut feel, sadly, which I don't really like giving that answer, but that is the truth.
Yeah. We had one founder, actually the founder of Fritz Cola. I don't know if you're aware of that brand. Right. They actually conquered Coke, and they said we actually are the little David versus Goliath. And he said one of my KPIs in the beginning was just my bank account. This is where I actually came up with the idea of cash flow, that this is so important because the idea is obviously very good and the vision is there and the enthusiasm is there and the ambition is there. But if you're running out of money, you're basically lost. And if I look into our industry, there are so many good concepts that actually fail because they run out of money. From your point of view as an investor, maybe we can dive a little bit into that. How important is it to be cash flow positive and not just borrow the money from you or from the bank or whoever?
Yeah, I mean, look, when we make an investment, I think there were two things. We are maniacally focused on the unit economics and KPIs. So when we invest in any business, we look at their historic venues that they have opened. What sales have they generated? What capex have they spent? And what conversion in terms of EBITDA and cash do those sites generate? So is there a sustainable and scalable model? That is just a huge part of our analysis on any company, right? I mean, that's the first thing. So then obviously capital is invested from our part, and then the business scales, and our money is always spent on two things. It's opening venues, so capital expenditure to open, and building out the team, right? So, and I think on the team point, you're absolutely so correct on cash flows. And we always insist, if a business doesn't have a good CFO or a CFO at the time of investment, that they get a CFO the other side of investment. It is a red line for us because a founder needs that check and balance of somebody that's focused every day on financial control and cash flow, whilst they are off opening new venues, focusing on brand, focusing on product quality, et cetera, et cetera. So a great CFO. So again, both Pizza Pilgrims and Farmer J have brilliant CFOs that will flag, guys, we need to pull the handbrake here, or we need this, or we need that. And that's a huge part of the team.
Yeah. We also figured out that resilience is quite important for any kind of business, and it's also in your investment philosophy that highlights resilience and adaptability. Do you have a specific example, without naming the brand, where one of your portfolio companies, one of your entrepreneurs in your portfolio demonstrated exceptional resilience?
Yeah.
And how did that impact the business?
Yeah, I mean, look, the obvious example and the one that's a standout example is Farmer J. So Farmer J, when COVID hit, I think I'll get the numbers wrong, but had 4 or 5 sites. They were all in the city and Canary Wharf. Yeah. COVID hit. So, and the business, I remember distinctly in February 2020, so COVID was March, obviously 2020, the sites that the company had were all like knocking out record week after record week after record week. The business had really captured the zeitgeist and was flying. COVID hit, and clearly in this sector, you could not wish to be in any worse a place than a city-based, fast casual grab and go business. Because when people came out of COVID, when they rushed to their favorite bars and restaurants, et cetera, they didn't necessarily rush back to the office or an environment where they were consuming fast casual food in an office environment. So, I mean, the resilience that Jonathan showed and the team throughout, I mean, you could look at it through a lens of many of Farmer J's peers at the time didn't make it through. And the resilience that Farmer J did, and the resilience it showed, is actually the reason that the business today is so unbelievably successful, that I would say it's probably in the top 0.01% of UK leisure is in terms of its like-for-like performance and its performance of the company at the moment. And that is Jonathan and the team dug in, and it was bleak and it was really difficult. And they dug in. They never got the green shoots that other businesses got. So, Pizza Pilgrims and everyone charged back when lockdowns lifted to their pizzerias with their family and friends. Farmer Jane never got that into the same extent. And it was Jonathan, him and I talk about it a lot. It's the making of him probably as a great entrepreneur.
Yeah. It's actually a kind of a metaphor also for that podcast, which is named From Doubt to Drive. And there you see that hardship and dark times actually can also lead to a new strength. And what we figured out is, or we actually frame doubt as a catalyst for growth and innovation. How do you view doubt in entrepreneurs you work with? Is there something that you have to mitigate or embrace?
Yeah,
or how do you guide your founder through that moments of uncertainty? How do you do that?
I mean, the relationship with founders changes over time, good or bad. If we are an investor in a business, if you're being a good investor and a good non-executive, the relationship should evolve and should have difficult times and good times. But it's a bit like, it's classic cliche of a sort of marriage. If you are a sort of disengaged investor or a disengaged non-exec, you might have a fairly linear relationship. But when the founder is low, you should try and, as an investor, you should try and pick them up and buoy them up. When they're getting a bit cocksure, shall we say, and everything's going well, you probably have to go the other way. It's a sort of yin and a yang. But it's a lonely, businesses go through great periods and they go through tough periods. All small companies, whether it's, I've been an investor in small businesses outside of this sector, and it's not just in leisure and hospitality that tough times are had. They're had everywhere. It's about, as you rightly say, resilience of a founder and the people the founder has around them, whether that's investors, non-execs, their core exec team. It's about pulling together in difficult times, and that will make the business better and the founder better.
I'm very happy you said that, because I think there's always this misbelief when we coach entrepreneurs or founders, and they're looking for the first investment, and they're trying to get a firm in like yours or somebody. They always feel like from the moment the big boys, the money joins, they need to be perfect. There's no more room for failure. There's now the big guys in there, they pay X million for X%, and now I cannot doubt myself anymore. I cannot struggle anymore. I need to be perfect. And this creates a huge amount of pressure, and it also takes the beauty of the entrepreneur to take sometimes risk away. And we see a lot of this in our podcast when we interview people and say, what was the moment when it went dark? They said, when we got the investors on board, because we didn't know anymore to communicate. So it's very liberating, Darrel, that you give this confidence that there is another set of investors where you still can fail and struggle as an entrepreneur, because as we know from all the interviews we did, it's part of the journey, and every entrepreneur will struggle and face doubts at some time. But what I want now to ask you is, when you see and you saw a lot of businesses or entrepreneurs struggle, from your perspective, what's the difference between the one who make it and the one who fail? What is it actually, if you have to nail it down on 2-3 traits or habits or core characteristics, what makes the one succeed and the other one failure? What is it?
So there are two component parts in really simple terms to any business. There's the sales line and there's the cost base. Okay. So when tough times are hit for any business, the successful entrepreneurs will really know the levers that will make them survive. That's the first thing. So that is how do we drive sales in the first hand? And that is a harder thing to do. Driving sales is a hard thing to do in a difficult environment. But cutting costs and protecting, going back to that word cash flow again, protecting the cash in difficult times and knowing to when to pull the lever and how quickly to pull that lever to protect the business is what defines, in my opinion, great entrepreneurs in difficult times. It's all when the tide is rising and, you know, sales are flying and like-for-likes are up and new sites are all working. You have one set of business disciplines. When the business hits the buffers or it's a tough time, the market, or whatever it might be, for those entrepreneurs that react quickly and decisively and, you know, on the cost base, and also whatever levers they can pull on sales, those are the great entrepreneurs. Mm-hmm. The ones that are, I don't want to call it complacent, that it'll come back and just keep sort of not bury their heads in the sand, but, you know, just keep doing the same thing. That is the difference.
I think you're so right. And we had that as the insight number 3, which is take decisive action. We heard that from a lot of our guests, and one of the summaries, and I'm reading out now from our white paper, is inaction kills much more businesses than failure and action will ever will. Do you have doubts in that situation? Sure, but embrace it. Do you have fear? Sure, but harness it. And Clive Schlee from Bretch says, you cannot tie yourself up in not a difficult situation. You have to get moving. You need to have to make this decision. And I think you completely nailed it down. In that difficult situation, there will be very difficult situation. You need to make decisions to close locations, to let people go, to make painful decisions, to protect the cash flow, and you need to make them quick in a very, very uncertain environment, because nobody will know if that's the right decision or not. And I think that's very strong. We have one more topic on this insights before we come to the final questions, is self-care. And why I bring it up, there was like 9 insights. And one of them was you need to take care of yourself as an entrepreneur. With all the pressures we're having out there, you need to treat yourself with care and respect, because you cannot afford that you burn out. And I think that trait of an entrepreneur was not so much in the focus in the phase before we have now. You kind of needed to be the hero as an entrepreneur. There's no room for failure. You need to work day and night, etc. And today, right before that podcast, Darrel, I had a coaching session with a think tank from the European Union. And there was 15 entrepreneurs. And I gave them all the insights, all the 9 insights. And I let them pick which one they wanted to do a deep dive. Is it purpose? Is it team? Is it execution, etc., etc.? And from the 15 entrepreneurs, 13 picked self-care. What can I do to take care of myself, to be the better leader, the better founder, the entrepreneur? How is that aligned with your strategy as an investor? You have a very short moment, and you described that. You have to get in and out at the right time from your investment. Speed matters, growth matters. How can you tolerate or even encourage that also the health and the mental health of the entrepreneur, because it matters? How can you align that this is not a problem?
I mean, I think I 100% agree with everything you said. I mean, people in this sector have had a brutal 5 years. Brutal. It's just one kick after the next. And obviously the budget from whatever it was last week, the week before last, is the latest kick that people have to deal with. So people's mental health is very, very important. And I guess there's a couple of things that we always do. We always encourage the entrepreneurs to have a coach themselves. We're always very aware, it sounds like a really silly thing to say, but that entrepreneurs take good holidays when they're running these businesses. They get away from the business, and they, you know, when they're on holiday, they're not checking in on daily sales and weekly P&Ls, and they actually get away from the business. We find it's often smaller things. And also, it's a personal thing. I always try and spend a bit of time with the entrepreneurs over a beer where we talk about everything other than the business. That it's a human touch, really, but there's you always look for people, and it's often the mental health, the human care side of things. It can often, what we forget as entrepreneurs is that that we forget, sometimes as investors, entrepreneurs are people, and they have problems outside of the business. family problems or whatever it might be, because they're humans. We all have these issues in life, or health issues, or whatever it might be. And all I guess as an investor, we've got to remember we're not there. We're their partners in business, and we're there to be empathetic and caring. But ultimately, we are not their best friends. We are not their family who they turn to. And often it's human nature that people don't want to show weakness to their investors.
Yes, that's what it is. They don't want to show because they're scared to show. And by not showing, it creates this parallel, dangerous ecosystem where you then have the misalignment that you think your entrepreneur, the main horse you're betting on, is full thriving and on full speed, whereas he or she already is on the edge of burnout, and you don't know that because you don't see it, and the founder doesn't trust you enough to raise the flag and say help, help, help. So I think to encourage that culture, which you just described, is really amazing. Especially, that's not what we expect from an investor to be. And I think it's more the partnership approach, which you emphasized at the beginning, that you're the partner and not so much just the investor. So I want to close that kind of section of the deep dive and go to more overall point of view. And is basically, when you look at the current world, and you already described that the brutal last 5 years, and now you just mentioned another kick, especially for the UK business. You call it budget. It's basically the restriction the government puts on our business. Overall, or outside of that, if you think about your private life as a human, you said that before, as an investor, what are the main topics which keep you up at night? What is really concerning you besides the nitty-gritty day-to-day thing, which we have thousands of things? But what are the main topics in that, or in your world, let's put it that way, because the world sounds so far away, your world, which keeps you up? What is
so people forget with firms like IMBIBA, or any of the investors you've mentioned, whether it's Robin or Henry at the Trispan and McQueen, our job is we raise money ourselves. So we have investors ourselves. So people back us to then back others. I mean, and last week I was in America. I was in New York, and I was in Boston, and I was in Washington, and it was various meetings, and met lots of different people, some of our investors who are based out there, and it was, I've got to say, it was brilliant to be there. Not I mean, obviously, with whatever your political views, it was brilliant to be there because of the economic optimism and the desire to do business and the want to do business. I mean, it was just felt a positive economic and commercial and business environment. The thing that keeps me up is to answer your question, is just this political landscape. If businesses were just allowed to get on and do a good job, service the customers, make a profit if they do a good job, and don't exist if they don't do a good job, because market forces will allow that, then that would make things easier. But it's just this constant interference and tinkering. And we saw it again 2 weeks ago, and it's just fairly exhausting, really, to be honest. And we are a layer away from the front line of these businesses. But as you would imagine, all of the businesses we're involved in are now looking at budgets, looking at labor, looking at all of their cost base, price. How much price do they have to pass on? Can they pass on price? All of this stuff. It's just relentless. And that is the simple thing. And all of that leads me to, as well, the ability of IMBIBA to continue as a business, which I hope it does for another 20 years, is our ability to raise new funds. And I can tell you, as somebody that has led the fundraising for both of our funds, our investment funds, trying to convince people that it's a good idea to invest in UK consumer businesses. If you're speaking to people in Germany or in Holland or wherever it might be, before I've opened my mouth and even explained IMBIBA, I haven't even managed to screw it up yet. They're like, hang on a second, you're a small cap UK consumer investor. It's like, are you mad? Have you not been reading the press?
It's not an easy fundraise.
No.
You disqualified already by your existence.
Exactly. But to your point,
Disqualified by existence.
exactly. So I would just love for it to be an environment where I wasn't immediately disqualified by just being a UK small cap fund, which happens to invest in consumer brands.
Yeah.
But anyway, that is the world we live in.
Yeah. So, Darrel, I finish our conversation with our, let's say, signature question, and you are in a position where you probably get this question from your entrepreneurs quite often. If an entrepreneur reaches out to you in a moment of doubt and asks you for help as a mentor, as a friend, as an investor, maybe all three together, what would you give as an advice?
Well, look, at that point, the question you just asked, that's about being a human. It's not about being an investor. And, that's
Right.
about being a good person. And, investors have to have difficult decisions with discussions with entrepreneurs over the years. But if one of our entrepreneurs, as any of our team here, not just me, came saying, I'm in a difficult position, our default has to be that we help those people, whatever it is. I mean, that's a different thing from a business thing, and if all of my partners at IMBIBA don't act in that way, they should not be in IMBIBA. That's a human thing.
Very strong ending, Darrel. We really like that. Thank you so much for being a different kind of investor, for opening up here and probably encourage younger founders and entrepreneurs out there to take the money, because it's also, I think sometimes people even say, I don't even talk to them because they will ruin my business. I think it takes interviews and discussions like that to show that there is another way out there, another angle out there, that we don't have to be perfect to be able to take the money, that we can keep on being human, that we even get great assistance from you. So I think there's a reason why you have gotten this Investor of the Year award. So thank you so much for doing that. Keep on spending money on us, Darrel. We need it. There's much more people out there who need your fund, and keep on raising funds because you're gonna need more. Thank you for being here, Darrel.
Thanks, guys.
Florian is the cash flow guy, and I'm sure Darrel will call you in a second to offer you a job. Who would have thought that Florian ends up in the finance department?
There you go.
There you go. That. There you go. So what did we learn, Florian?
Oh, actually, quite a lot. No, I mean, let's start from the beginning, where Darrel actually said how important it is to have a full-time property director. Not only an investor. At the beginning was very surprising to me, but if you think about that, if they invest a big part, and he mentioned later, of their actual funds going to property, meaning real estate decision, and if you make the right decision, you thrive and make your money back, and if you make the wrong decision, you fail. And I think to have a property director on your side, an experienced one, that helps. So very smart. Yeah.
The second one I really like, because he said what really made the difference in investing in Pizza Pilgrim and not another pizza joint is authenticity. And that's not the thing you expect first from an investor. You expect like the KPIs are great, But to say, we picked on purpose Pizza Pilgrim because they are authentic. And that's the only business we look at. And if we don't like that, we don't invest in pizza. Yeah. I think that gives a huge confidence level to the guys out there who says, like, I'm on the right track. What do I need to do? I think as long as you're authentic and you stand for something, then you're going to make it very strong.
And the authenticity with Pizza Pilgrim, for those of our listeners who don't know the concept, is that they actually went on the pilgrimage.
Yes.
So that's really...
Great podcast. Listen back. We copied that in. What else?
Then he said, as an investor, we never comment on the product. Mm-hmm. We support the business infrastructure, but brand and product should be sacred.
Amen.
Amen.
Then he said there are mistakes and there are mistakes. It's another way to say what Michael Turok said. Will that mistake just hurt you or will it kill you? And he clearly said we only interfere if there are mistakes and which can kill you. I have a next one which really touched me, Florian, and that was like, I said, how do you pick it? And how you pick investment. He said, you have to be aligned on the founder's strategy. It cannot be your strategy. And it's very strong. If you as an investor don't like the founder's strategy, don't get in and try to change it. You will fail, it will escalate. If you don't like the founder's strategy, move on, find another one. I really like that approach to say, we cannot change the founder's strategy. If we like it, we give money. If we don't like it, we move on. Very strong.
And he said picking a founder a founder is an art. So it's also
it's an art, not in science. He said, and he was very honest. I mean, he's a banker, and he said it's more gut feeling than you think. It's less,
that's true.
It's less data.
But then
next?
Still, if he mentioned that their money actually goes only into CapEx and team, and how important it is for every growing business to have a reliable financial source like a CFO.
I really like that. We insist on getting a CFO. He also said, when we talked about what matters, he said the first thing we look at is the unit economics. And then he said two things which I really like, very simple but very helpful. It needs to be sustainable and scalable, because we need growth to exit. So on the one hand, sustainable and scalable. I really like that.
Then we talked a little bit about struggles and doubts, and then he said good non-executive directors and investors should be engaging with the entrepreneurs. There are always ups and downs. It's a little bit like yin and yang. You help them in struggle. You slow them down when they are over-exaggerating. So that's also a good learning from his perspective.
Definitely. And then he talked, I think he nailed that. He said, relationship with the founders, they will change over time. If you disengage, they will be linear. But if you engage with them, you need to pick them up when the energy is low. And you need to ground them if they fly too high. And I think I really, really like that. And that was a very strong, and that's actually what you want out of your non-exec coach, mentor, investor. If you get that out of somebody and you get money, you need to buy in.
Yeah, that's true. He said successful entrepreneurs know their levers in difficult times. And what he mentioned then is driving sales, cutting costs, protecting cash is substantial in difficult situations. And I mean, we learned so much from Darrel here that I'm not sure if we ever discussed so much about an interview afterwards, but there's so much substantial knowledge in and that
broken down really to nice sound bits also. And when we said like what he does to help the entrepreneurs, first he said we encourage them to have a coach. We heard that also from Katie Johnson. Get yourself a work therapist. So I think that was the kind of like mystic lift that you can be vulnerable, get a coach, work on it. You have to push them away on holidays. Also very clear back then, Robin said that you need to get them offline. You need to have the human touch with the founder, understand what drives them. And the summary of that chapter was, entrepreneurs are humans and have human problems.
Yeah, absolutely. Yeah. And you have to talk about things that are other than the business. That's also something that goes into this mental health and how important it is, and what you actually underlined with the 13 out of 15 startup entrepreneurs who were so much focused on mental health and things like that. The default of this investment company is to help people. I like that a lot. It's a very nice credo.
The default, if somebody comes with a problem, has to be to help them. And he ended with a very nice quote. There are too many peoples in the graveyard which thought they are irreplaceable. And then he said, We invest in business which already have a certain size. Although they are small, they're a certain size. Each of them need to be able to survive that the founder is away a couple of weeks.
Wow, we hope you've enjoyed this episode as much as we did. But sharing is not just caring, it is also empowering. So recommend this podcast to fellow entrepreneurs who might need a dose of inspiration. And don't forget to hit the subscribe button so you'll never miss out on future episodes. Thank you for being part of the community from Doubt to Drive Entrepreneurs Only. Mario and Florian are already gearing up for the next episode. Until then, stay tuned, stay driven, and we'll be back next week.